Welcome to PeopleSoft channel. Debits and credits is always a confusing topic. In this episode, you will learn the logic behind debits and credits and how it simplifies the accounting process. In the end, I will also show you how these debits and credits come into play in PeopleSoft finance system. I will explain it with the help of some examples. Alright, let's get started. We will talk about debits and credits in a second. Before that, let's build some foundation to understand what is the need for debits and credits. I'll start from what is the difference between finance and accounting, and then I'll take it from there. First, let's talk about finance. Finance is all about identifying resources, and it's the process of finding the best way to acquire the resources. It involves investing, borrowing, budgeting, and forecasting. In order to do all these things, we need data, past and present data, in an easy to understand format. That's when accounting will come into picture. Accounting is about reporting the financial health of a company. Unlike finance, no decision making is involved. It involves day-to-day transaction recording, maintaining, and reporting the financial state of a company. And that's what we use our PeopleSoft finance system for. Guys, to club it all, businesses use past accounting data in the present to make future decisions to improve the financial health of a company. Now let's discuss what framework accounting systems use to record day-to-day transactions. To understand that, let's go back in time. I heard that seeds for accounting were planted 500 years back by traders in Venice. Whenever traders purchased items to improve their business, they referred those items as assets. They used to list them in a book. Not only that, they also listed how did they procure those assets. For example, did they borrow or did they invest their own money, and so on. Over time, that led to the invention of the famous accounting equation assets equal to liabilities plus owner's equity. This simple but powerful idea is on which all accounting systems are built, including PeopleSoft finance system. You'll know more about it once we start doing example transactions. We need to record asset on one side and how did you pay for that asset on the other side. We need to ensure both should be equal. Now I will define each term in the accounting equation using examples, and then we will apply this equation on some hypothetical transactions. Let's start with assets. Assets are the economic resources owned or controlled by a company that will provide future benefit to the company. In other words, all the things that company uses to generate profit or provide service are called assets. Examples include office building, land, inventory, of course, cash. Few other examples include for Apple company, iPhone, MacBook Pro, all these things are assets for the company. If you take Microsoft, it's Windows 10 software, Xbox, and so on. Now let's move on to liabilities. Liabilities are obligations that need to be satisfied either by paying the asset cash or by providing a service. For example, if you bought goods from supplier on credit, you owe them. That is a liability. Other examples include bank loans, employee salaries, government taxes, etc. Owner's equity is comprised of two components. One is paid in capital, all those investments made by investors into the company, and the second one is retained earnings. Retained earnings, as the name implies, all the earnings or profits that were generated by the company that are still left with the company. Sometimes what happens is they give back portion of their profits back to the investors in the form of dividends. For example, take a look at this simple balance sheet of Apple in the year 2019. Here you can see retained earnings of Apple of 53 billion. These are the profits generated by Apple from the beginning of the time. If you are aware, Apple also distributes portion of their profits back to the shareholders in the form of dividends. Since we are here, what else do you see in this balance sheet? Do you see all the terms of our accounting equation? Assets, liabilities, and owner's equity or shareholders' equity? If you calculate, does it sync with our accounting equation? I mean, assets equal to liabilities plus owner's equity? Of course, yes. You can calculate. That is the reason accounting equation is also called as balance sheet equation. I hope you got some high level understanding of the accounting equation. Now let's get our feet wet with a short exercise. Let's imagine for a second, today is January 1st, 2020 and you are opening a retail store. And let's go through some hypothetical transactions and get an idea how this accounting equation comes into play in real time. The following transactions happened on January 1st, 2020. Transaction 1. You invested 500k of your personal money into your new business. Transaction 2. You took a bank loan for 200k with 0% interest rate and the loan must be repaid in the next 10 years. Transaction 3. Bought a truck for 100k with cash to transport your goods. Transaction 4. Bought an office building for 600k in which land itself costs 100k, paid with 100k cash and remaining with bank mortgage. Now let's record these transactions on a spreadsheet using our accounting equation. Remember, assets equal to liabilities plus owner's equity. Alright, let's start with transaction 1. As a result of 500k investment, the asset cash increased to 500k and the source of cash is owner's equity, so owner's equity increased 500k. Transaction 2. This time the asset cash increased 200k but the source of cash is bank loan, so loans payable is increased 200k. Transaction 3. In this case we are exchanging one asset with another. Since we bought the truck with 100k cash, the asset cash decreased 100k and the new asset called truck increased 100k. Usually all the vehicles would be clubbed under one asset account, but in this case for the sake of simplicity, let's create a new account for truck. Transaction 4. This one is complex compared to others. Since we purchased building, the value of asset building increased by 500k and land itself cost 100k, so the asset land increased by 100k. And how did we pay the money? With 100k cash, so the asset cash decreased by 100k and the remaining was mortgage. Since we have to pay it back, it's a liability and it is increased by 500k. If you notice, we maintain the integrity of accounting equation in each specific case. What this simple equation does is, it forces us to consider all angles when we record a transaction. Based on that, we can understand how it affects the financial health of a company. Based on the transactions we have done so far, we can generate balance sheet out of it, which will look something like this. That's why this simple equation survived for more than 500 years unchanged. So far, we recorded all our transactions on a spreadsheet. Recording our transactions on a spreadsheet is easy, but it's not practical. Imagine for a second there are 50 accounts in each category, and if 5,000 transactions happen every month, spreadsheet can quickly grow into an unwieldy size. The founders of the accounting equation are smart. They thought about this challenge 500 years back and they came up with a simple framework to solve this problem. Let's go through the framework. Let's go through our accounting equation one more time. Assets equal to liabilities plus owner's equity. If you remember, when I discussed each transaction on a spreadsheet, I was either saying increase in value or decrease in value for each asset, liability or equity accounts. So draw a letter T. One side of the letter is used to denote increase in account value. Other side is used to denote decrease in account value. At this time, you might ask me, which side is increase and which side is decrease? Hold that thought for a second. I will come back to it soon. Instead of saying left side of letter T and right side of letter T, accountants have their own special terminology. Instead of saying left, they say debit. Instead of right, they call it credit. Now is the time to answer your previous question. Which side is increase and which side is decrease? Now listen this. This is important. Increase in asset value is denoted on the left side of the T account and decrease in the asset value is denoted on the right side of the T account. Remember, left side means debit, right side means credit. If an asset value is increased, we say asset account is debited. On the flip side, if asset value is decreased, we say asset account is credited. That's it. You have to remember or memorize or by heart this simple rule. From my experience, there is no other way. Once you remember that, the next step is easy. Liabilities and equities are just the opposite. They increase with credit and decrease with debit. And finally, we need to make sure debits equal to credits. When we do this, we are actually enforcing our accounting equation, assets equal to liabilities plus honest equity. You will understand that when we do our previous exercise again, except this time, we will use our new debit credit framework. Alright, let's get started. Here are our transactions. Transaction 1. We invested 500k cash into our business. As a result of that, the asset account cash is debited by 500k. Remember, increase in asset value is written on the debit side. You can also refer to the equation above. On the other side, because of that investment, the honest equity also increased by 500k. Increase in equity is written on the credit side, and that balances out. Debits equal to credits. Transaction 2. We borrowed 200k cash from bank. So the asset cash again increased, which means cash is debited. How did we get the cash? Through bank loan, which is a liability, and the liabilities increase with credit. By doing this, we are indirectly enforcing our accounting equation, assets equal to liabilities plus honest equity. I would encourage you to try other transactions on your own, and the results would look something like this. This framework makes it very easy to figure out issues, if any, even when there are n number of transactions. How? If debits doesn't match credits, you know something is wrong. Now let's understand how this debits credits framework gets enforced in PeopleSoft application. In order to show that, let me log in into PeopleSoft application. If you remember, when we configured ledgers for a unit for a company in my previous episode, I have selected balance ledger here. Let's see what it means according to PeopleBooks. When we create journal against this ledger, debits must always equal to credits, otherwise system will throw error after running journal edit process. There is one additional rule you must remember as far as PeopleSoft is concerned. All the credit entries are designated with a negative sign. It applies to all asset, liability and equity accounts. Let me show you one example. Take a close look at this journal. This is one of the existing journals in our PeopleSoft demo environment. Both of the accounts used in this journal are asset accounts. To be precise, they are bank accounts holding cash. In this journal, they are transferring amount from one account to another, almost close to how we exchanged the asset cash with the asset truck. Looking at the amount sign, you can easily make it which asset increased in value and which asset decreased in value. As I mentioned before, credits in PeopleSoft are represented with negative sign. Since assets increase in value with debits, in this case the amount is transferred from the account ending with 7 to the account ending with 2. What else do you notice? Debits equal to credits. That's it for today, guys. In today's episode, we focused on balance sheet equation. In the next episode, I will explain how net income is calculated. I will also explain how debits and credits work in case of expense and revenue accounts. That's all I have for you today. For more interesting content, don't forget to visit my channel. I'll be back with one more interesting topic next week. If you have any suggestion for me, feel free to drop in the comment section below. I would really appreciate it. Thank you so much for your time. See you next week. Until then, keep learning.